Hey, this is B-Trades coming to you with another trade recap for Wednesday, February 4th, 2026. And we had a continuation of the selling from yesterday. We had a nice level that had a lot of confluences with some aggressive selling from yesterday's price action, as well as the cloud and the SPY moving averages. So we're going to jump into the charts right now, check out the pre-market analysis. We had a value area rotation as well, and we're going to take a look right now. So this is my pre-market analysis from this morning, February 4th, Wednesday, 2026. We had some red folder news at 8:15, but not really a big reaction from price. And again, there was more news coming at 10. So as usual, I'm risk off until after 10 a.m. We opened fairly close to yesterday's close, so the gap fill seemed inevitable. Um, and we were below the clouds. So our bias was going to be only shorts below the cloud, also taking into consideration that we were so bearish from yesterday, and there were still some sell side targets below us as far as previous daily lows. The real support is down all the way at 680 for SPY. Um, and then also the options market was showing negative gamma today as well. We had the value area from yesterday, February 3rd, between 69.13 and 69.80, with that 69.13 being something I was definitely interested in as we were opening within the value area. Um, so let's go to the chart and see what happened now. So our first candle was this red one right here. This was the open. And the 10 a.m. candle was this one down here, this red one at the bottom. The 9:55 candle did make a fair value gap, which we were discussing in the voice channel. And when price came into this area, I took an entry and it went about halfway to target, somewhat into profit, and then kind of reversed to revisit this area up here, which coincided with the SPY 20-day moving average, as well as some aggressive sellers from the previous day. So here you can see this is a 30-minute chart, and yesterday around 11 o'clock, we had a cluster of four large orders. That was about 2,000 contracts to sell right here, and we had kind of stuttered around this area. And once we broke through and retested, though, we just dumped the rest of the day. And then we did come back up, but we could not breach that level. I think we closed right here yesterday. So this morning, our first candle went up there, and then that retracement that stopped me out also went to that area. But I was still fairly confident in the idea, and you can see I took a re-entry. Okay, so I'm going to just zoom in on this area so you can really get an idea of what happened. Here's my entry around this area. We pushed down into profit somewhat and then came up again. And then we were still holding with the candle body closes this 5-minute fair value gap. So then I still was hopeful. But then here I didn't notice that there was a bullish fair value gap creating a balanced price range right here, which actually caused the reaction that sent us back up and stopped me out. I could have taken partial profits at this area, but I took a small loss. And then you can see because I was still confident in this area and all the overhead resistance, I actually re-entered at the same place where I had stopped out at. And then so I actually skipped going through all this extra drawdown. Um, so that's like instead of just holding on to a loser and hoping it's going to come back to your area, just get out and wait and see if it does come back. There's no reason to torture yourself and take that hit on your capital as well. Part of the strategy for B zones is using consistent sizing and then respecting your stops because you want to give yourself room to be wrong. And this strategy is highly effective. It's about 80%, but even an 80% strategy is going to result in two losses out of every 10. So you cannot be overcommitted to any position. So don't get married. That's maybe not just trading advice. Um, but so I re-entered and then, I took full and I ended up in profit for the day and I actually took another smaller trade later on in the day, I think right here. This one, which is actually like the same. You'll find that you'll get the same level to level trade over and over again. You can see it was presented two times here. A lot of these trades recently have been based on that large order flow from previous days or even previous weeks, and that's kind of the beauty of the B zone system and the cloud together. That you're gonna find yourself, if you follow the rules, taking entries at points of previous aggression, which is something that's great because all the analysis is already done for you. I think the lesson today is really being okay with stopping out of trades. Even with an 80% system, you're going to be wrong two times out of every 10, and you could even get strings in a large enough data set of three or four losses in a row. So you definitely want to make sure that you're sizing appropriately. for that inevitable outcome or string of losses based on a Monte Carlo distribution. And I think overall, if you size consistently, the math is just going to work out in your favor. But you need to be patient and disciplined, not to oversize, not to chase, not to DCA. If you can do that, which it's not easy, I know it's easier to say than to do it, but I think you will find yourself on the right side of profitability, which is what I'm trying to help you do. If you have any questions, feel free to leave a comment below, and I'll see you guys tomorrow. Aloha.